With the pattern trader. My name is Mark Shawzin, the pattern trader. I'll be taking any questions you have, anything on your mind today. We had a couple of questions come in from our elite members. Our elite package is the kind of highest form of what we offer at the pattern trader. It includes all of my daily emails, gold, the master pattern trader sessions on Friday where I go over the markets live, and just about everything we offer. So kind of give a priority to our elite members. So at first, I'm going to take some of the questions from our elite members. So one of the questions was, can we go over some losing trades and investigate and talk about what happened in WestRock and some other recent trades that may have been before my time? So WestRock is a stock. The ticker symbol is WRK. Really don't know what you're alluding to in terms of what happened or a losing trade. So I did put in a suggestion to buy WestRock a couple of weeks ago, and then put a stop loss. Got hooked out prematurely. I think I bought it at 52. Advise our members to get out at 50. I was really wrong to do that because the pattern setup in WestRock, to my mind, is very bullish. And despite the fact that we have, some bearish markets today, WestRock is holding up extremely well. Let me just go to the chart here. WestRock's trading about 53, so it's holding in at or near. Sorry, I'm just trying to get out of some positions here. So WestRock is trading at 53. I think it has a huge bullish inverted head and shoulders, double bottom price pattern. It's hanging out at 53, and I think that you'll see the stock print at 75. So to my mind, if you hang on to that trade, it won't be a losing trade. But in terms of losing trades, there's kind of a misconception in the forex industry or any trading industry for that matter. One of the biggest questions I'm always asked is what is your win-loss percentage? And frankly, that is a very irrelevant question, because you have to look behind the trade. So if you look at most EAs, these are algorithmic turbo things that are sold on the internet for $300, and they show that they have like a 90% winning ratio. But if you look under the hood, if you look at what they're winning like 1 pip or 3 pips or 5 pips multiple times a day. And then one day, 3 months from now, they won't recognize a market environment, and they'll dump like 80 pips on one trade and you'll get wiped out. And so you'll see that a system that has 90% winning trades actually then loses all of its money, and you wonder how that happened, because they lose more on one trade than they make on 90% of the other trades. Now I do it the other way around. I can make more on one trade than I lose on 10 trades. So I could send you 10 losing trades in a row and you'll go, this guy, I thought he was great. Turns out he's just another scammer. He doesn't know what he's talking about. And then you'll dump out of the program. And then the 11th trade, I'll go ahead and just make a huge win. 3 weeks ago, I told those on my master pattern trader when the QQQs were trading at 334 that this was the top of the NASDAQ. And that day, after I got off the master pattern trader sessions, which are sessions that I do every Friday at 11 a.m., I convinced myself so well on that session that there were so many bear price patterns in the QQQs that I loaded up on triple Q put options. I bought, I don't know how many I bought. I bought like 700 put options priced at $1. Now each put option represents 100 shares, so $1 is really $100. And if I bought 700, that means I placed a $70,000 bet that the indexes were going to decline. And if I was wrong, I would have lost all of my money the following week. Turns out the next Monday following, the market started dumping. By Tuesday, the market dumped so hard it went right through my strike price. And the put options that I was buying for $1 went to 10. So I made 10 times my money on one trade. Now this will wipe out 30 other trades that I may be wrong in. But it turns out I've been pretty right, for a while now. I've been having an amazing streak. I told our members to go long Lyft, ticker symbol LYFT, at around $44.50. The stock's now 63. It went to about 68. I bought the stock. I bought the calls. I made just a ton of money on Lyft. And sorry, the Nasdaq's crashing here, so just increasing my positions as I'm talking to you here. So yeah, I mean, you're always going to have losing trades, and I don't worry about losing trades. I just move on. In fact, I think if I understand, I become like a really good trader. I don't say that just to be self-serving. So look, I have this business. I love communicating with people. The business for me is a hobby. I make decent money, but I make all of my money in trading. So whatever I'm talking to you guys about now, believe me, I am loaded up in my personal account. I'm not one of these guys that's trying to show you a track record to get you to buy my program. I don't care if you buy my program or you don't, if you like what I say or you don't. I make all of my money in trading. And if this business went away tomorrow, I would still have the skills to make all the money I need in trading. And so I think what has made me so effective is that I've kind of gotten to the place where I don't think about trades in terms of money. I don't think in terms of trades of money, whether I win or lose. My heart doesn't really skip a beat. So those options that I talked to you about, that I bought like 700, I made $500,000 in 1 week. Actually, in 2 days, between Friday and Tuesday. And I mean, I just saw it as making an effective trade. I just saw it as seeing a setup, creating an investment structure to take advantage of the setup. The market saw what I was thinking, and I was rewarded. I made the money, and now my mind is, okay, what is the next setup? I don't even care about the money I made. I mean, and it was obviously a vast amount of money in a few days, but my heart didn't actually even move. And the week following, I did the same thing, made another 500. And then I got kind of obstinate. It's like I see that the Nasdaq's coming down. And so obviously things take its time. So when the Nasdaq dropped, or the QQQs dropped to 300, on a bounce, it bounced to 310, and I started shorting again. I started buying put options. And that week I was wrong. And if you're wrong, your options expire worthless. So I lost 80 grand in 1 week on one trade. But I didn't care. I didn't care making about 500. I didn't care about losing 80. To me, it's always about the trade. Okay, that trade won, that trade lost. Now what's next? I'm always looking forward. And, if you understand your process and if you have an edge, eventually you'll find something that, will make you a ton of money. Like before I found Lyft about 8 weeks ago, I was in a losing streak. I was down about 20% of my account. I bought Lyft early before it turned around. I bought IBM early. I couldn't do anything right. And I went down like 20% in my account. And then I saw the Lyft trade where I started buying calls and I started buying the stock, and I made a ton of money. And then I saw the NASDAQ, and now my account's up 400-500%. So from going down 20%, I'm now up like 400%. So the thing is to, just to understand that trading is a process. And I'm always looking for the setup that's going to translate to, big money, translate into a big move. So I'm not looking for the little moves in the markets. I'm not looking for 7 pips here, 20 pips there. I'm not looking at a 15-minute chart with some moving average crossover. I'm looking for a setup that's going to translate into a monster move. So, sorry, I'm keeping one eye on the NASDAQ here, and it's kind of driving me crazy. Let's see. GK says, I'm trying to follow the trade management risk of risking 0.5% to 1% of my trading capital. The difficulty is in taking multiple trades or multiple pairs. What is your advice on a small account? Well, my advice on a small account is the same as my advice on a big account. It's the tortoise that wins the race at GK. What happens is most people are betting too much money on one trade. And then when they lose 3% or 5%. So in that case, if you get 5 bad losing trades in a row, and you have a 3% risk or 5%, you can lose 25, 30, 50% of your money in a small space of time on a meaningless sequence of trades. Whereas if you're risking 0.5% a trade, it really shouldn't matter. If you get 10 bad trades in a row, you'll be down 5% in your account, and you can live to fight another day. And that's the whole point in this game. The whole point in this game is survival, right? To not wipe yourself out so that you're there for the next opportunity. And what's happening is most small traders are trading too many times a day. They're risking too much money on an individual bet. And so what I try and do is look for one trade that I can stay in for 3 days, 3 weeks, 3 months. So instead of being in and out of the market 10 times a day, if you're in and out of the market, even if you're risking 1% or 0.5%, that you're just going to overtrade yourself. You're going to lose objectivity. And there's just no way you can win in the long run. And that's what I think the big mistake is for most small traders, is they're trying to, swim in and out of the market, taking 7 pips here, 12 pips there, and it feels good if you can do that 3-5 times in a row and you think, oh, I've got something. But you can't keep that up for 3 months or 6 months. The broker's going to end up with all your money. So what I try and do is I look at one setup. Like I saw Zoom, it's got this monster bear price pattern that I think is going to, translate into a monster move lower. And I started getting short at like $350, and now it's $310. So, and I've been sitting in this trade since the beginning of March. So almost 3 weeks now. So that's what I try and do. I try and find a setup that I understand. I understand where this is going to go long term. Now, in between that, Zoom had a whole bunch of, monster moves. When you have these, what I call short covering rallies. So, when the market's going down, as the NASDAQ has been, when it moves up in monster moves. And those monster moves look like the real thing because they're so big and they're so quick and they take your breath away and you want to jump aboard that momentum. But, if you look at the big picture, I just look at those as opportunities. I just sell into them. So when Zoom had a monster move last week, it went to $309, or $316. And then the next day, it rallied to like $345. I mean, I just couldn't believe it, from $316 to $345. And I go, this is just an opportunity. I'm not scared. I'm short. I was losing money that day. But to me, that was just an opportunity, and I shorted more. And now you're on a 6-month low. You hit like 305 today, a new 6-month low on Zoom. Let me take some other questions. So GK says it makes a lot of sense. So yeah, just stick to your plan at GK. And the thing is, once I find a trade that is working for me, that I see that's going according to where the chart and the direction is, then I look for different entries to add to my position. And the thing is, if you're adding, in a winning trade, then you're not taking additional risk. Because even if you're taking, even if you take a loss on the new ad, you've still got the profit built from the previous trade. So most people do it the other way around, where they add to a losing trade, and then it just snowballs. So you can start off with a 0.5%, 1%, trade in something you like at GK. And then if it starts moving in your favor, then you can use a key reversal, use an inside day bar. Like gold. I've been short gold for months now. And then on the weekly setup, this week, my newsletter, if you get my newsletter, I said put a sell stop under last week's very narrow range bar. So the weekly bar in gold last week was, I think, 1720 to 1750, which in gold is pretty narrow. It's like $20, $30. And I said, just put a sell stop at 1719. Well, today we hit 1685. So you made 30 pips in gold just putting your execution order in there. And to me, I was just adding on to an existing winning trade. So, so then the question is, where do I think gold's going from now, GKS? And I think it's going lower. I've been saying that for a long time. And gold is now back to its weekly lows around 1670. And I'm just getting this price chart up here. So we're trading at 1685. I think the recent low was around 1677. So we're just a hair off the recent lows. I said we were going to come back and retest these lows. And now I think we're going to 1650 at least, if not a lot lower. Shane says, which broker to use for stocks? So I use a half a dozen brokers, Shane. So one, I'm fine. How are you doing? Y says, do you analyze the fundamentals before you favor a long or a short? So not really. I just go into companies that I have no idea what they even do, just based on a price pattern. And I think that's the best way to do it. Now, recently I started looking at this stock, AMC Theaters, because I wanted to take a big short position. And because the stock is only trading at $10, so obviously if you short something, at 10, you only have an upside of $10 because it can only go to zero, and you have an unlimited upside. So I started taking a short position, and then I started kind of looking into the company just to make sure, I was kind of, I just wanted to reinforce what I was doing, which is something that you really shouldn't do. You shouldn't, if you're looking for news or something else to corroborate your trade, then you're not really sure about your trade, and then you shouldn't do the trade at all. But I wanted to, take a monster position in AMC because I think that this thing is going to zero. And so I did start taking a look at the fundamentals of AMC. And, I think this is a zombie company. It's a company that's, among the walking dead, is trading at $10. But this thing is going to go back to $2. They have diluted their shareholders 400% in the last several years. I think there was like 107 million shares originally outstanding. Now there's 370 million shares, which means the company has to make 4 times as much as it did pre the pandemic to pay back the shareholders. It's just not going to do that. And it has about $6 billion in debt. So I don't care if it puts, if it fills up every seat for the next 10 years, it's not going to be able to pay back its debt. So it's just a question of time. This thing's going to zero. So it's all about timing. But I don't really look at the fundamentals. The fellow says, what's your take on Australian Canadian? Yeah, I think, I was looking at New Zealand dollar Canadian. I think that this is broken stride. And I think I like the New Zealand dollar Canadian short. I mean, I think the Australian dollar Canadian will go lower too, but I like the New Zealand dollar Canadian better. It looks like you have an inside weak bar this week on New Zealand dollar Canadian, meaning that the range from high to low looks like it'll be inside the range of last week. And I would just put a sell stop under the low of this week's low. Shane says, how many signals do you give approximately per week? It really depends on the market, Shane. To me, I'm not looking for quantity of signals. I'm looking for quality. So I'm always looking for high quality risk reward things that are going to translate, into, nice moves. So, sometimes there, are very few trades. And then I think in this week's weekly video report, the Sunday report, I kind of gave more trades than I usually do. I suggested going long pound New Zealand, pound yen, going short the stock of WestRock. What is WestRock doing? It's rallying today. It's trading a little bit above $53. I really like the long-term look of this stock, WRK. And then I also suggested getting short gold, putting a sell stop at 1719. Today you're trading at 1680, so you got a 400 pip move on gold off that one signal. Shane says it's clear. Do you give them? Yes, all my trades come with a stop loss and a take profit, and then I update every day or week. If that position is still on, where to move your stop loss or take profit. So it's kind of like a dynamic process. Juan says, as far as the expiration day on puts you buy, do you always go for 3 months or 6 months? So, no, because sometimes I just do it a week in advance, Juan, and that means I really have to be right about the timing, because the further out you get, the more you have to pay for that privilege. Now, some options are structured where the strike price or the expiration is 3 weeks away. I remember I was buying call options on KTOS. And what I loved about that play was that I had about 6 weeks to sit in that trade to see if it was going to work out, rather than having to expire the following week. And but typically, I'm trading with certainly QQQ options, just 1 week forward, because the more you go out, you lose the leverage, right? So if I'm looking to make a play on an option, I want to see that I'm going to make 3 or 5 times my bet, because frequently my my bets will expire on me. I'll lose 50% or 100%. So in order to make up for 100% losses, you need to have the wins that make you 500%, 700%, 1,000%, and then it makes up for all the losses. And fortunately, I've been able to do that. I've had some monster hits in the market. I bought some puts in Beyond Meat. I paid $2.50. 3 days later, they were $12.50. So I made 559% in 3 days. So that's what I'm looking for. I'm looking for those 5-to-1 hits, on these trades, because a lot of them will go, belly up. So, you need to pay for the party. Gia says, shorting gold. I've been short gold for months. I've been telling our members since it topped out at 2,100 that I was bearish on gold. Now, again, this is very different because, gold is an emotional thing, and predominantly, everybody here on the news, you hear these commercials for gold all the time. Everybody's bullish gold. So that's the thing about a trader. You got to be able to walk in a room where everybody is saying buy, and you got to have the conviction if you think that, it's the other way. And it felt weird when the whole world was buying at 2,100. JP Morgan put a $3,600 price tag on gold, and who am I? I'm just some moron with a way of looking at the markets. And I've been, if you're part of my group, for 6 months, I've been short gold and saying, you need to be short gold. So you need to have that conviction. And that's why, you shouldn't look at the news. You shouldn't hang out in chat groups. You shouldn't take opinions, not even from me. The only thing that matters is the market. It's you and price. Price is the news. The market is a discounting mechanism. The market is ahead. The market is pointing to where it wants to go. Don't worry about what this moron on TV is telling you. Every day I listen to these guys. You see these $1 million analysts. They talk about their company, all the great prospects. And then I'm looking at the chart behind it, and I'm going, I'm rushing out to short his stock. And he's telling me how great it is. And, the story sounds very compelling, but the price behind his head with the chart is telling me a whole different story. And to me, that's the only thing that matters, is price. Shane says, in the program you offer, you learn how to look at the prices. Correct. That's all I do. I teach people how to look at price, how to become independent, be able to, chart out a, financial future for themselves where they don't require anything else, any other resource than just the market itself. So that's what I do with the pattern trader. That's why I started the pattern trader, to give people more information. And frankly, my idea is, not to make money, but to make you independently, so you can sustain, a future by yourself. So I'm just kind of keeping one eye on the NASDAQ here. I think the time is up for the NASDAQ. We're going to start crashing here. Harry wants to look at oil. So I've been saying for several weeks now that oil has a several year distribution resistance at the $70 level. I would I think oil is got a lot of resistance up here, but I think it's locked in a sideways trading range. I think that it's got some downward pressure here, but I don't see it caving in right now. I think it's just locked up in a very range bound thing. Kirby says these bond yields will help push the market down. Not necessarily true. It's one component, but not necessarily true. The dollar looks like it's going to remain stronger for a while. Yes, I think long term it looks weak, but I think for the next several weeks, maybe even this next several months, it's in the sideways channel. I've been short the euro versus the U.S. dollar, and I still think that the euro versus U.S. dollar goes to 115, 116. We're plunging again today. We're at 117, so we're just about 100 pips from a support level that so I've been short since 119.37. I suggested going to short-term members at 119.37 at the beginning of March. So I've been sitting in that position for 3 weeks now. Let's see. Dennis wants to know about Zillow. Ticker symbol is Z. Let me just pull up a chart here. Yeah, so Zillow looks like it's forming a double top head and shoulders. All of these markets look so vulnerable, and yet these indexes just somehow don't roll over. Let me just look at the weekly of Zillow. Wow, yeah, it's broken. It's broken out to the downside. It just cracked some recent lows. So a lot of these stocks are cracking these long-term lows, and I don't know if that's a trap under here where maybe it's it creates a vacuum and you can buy into that. But Zillow is just like Zoom went a lot lower this morning, and now it's going higher, and I don't know if I need to get out of this thing. When something starts acting contrary to what it should be doing, then to me it's time to get out. What do I think about the small caps? They've also been taking it on the shorts. But I think the NASDAQ is more vulnerable to. So let me take a look at this IWM. I've been looking at that. I don't know. It kind of looks like it has some support here at this 211. I mean, it's forming what looks like a head and shoulders, but I can also see this is in a long-term uptrend, and there is two key reversals on the daily, on the IWM. That one at 206, the other one at around the 208. And I don't know. This market is trapped within the zone. It does look like it's going to roll over. I mean, it does look like it's forming a head and shoulders, but they've got these two key reversal bars that have been holding this thing up. So I'm going to keep an eye and right now, this is still in a stealth uptrend, and until we break below, I'd say 208. I don't know. This could be just in a sideways consolidation. It does look like it's forming, a head and shoulders here. Uche says, "What do you think about the dollar yen pairs?" I think there's looks like there's a paradigm shift going on in dollar yen. I suggested our members to put a buy stop at 109.97 last night in the dollar yen, and today we bolted higher. We're trading above 110. This was a huge resistance zone, and the market's not resisting. So when the market gets into these things and it doesn't look like it's respecting it anymore, it suggests that it's going to keep going higher. So the dollar yen has been in a 20-year downtrend, and now it looks like things are turning around. And when things turn around, they can turn around in a hurry. So there could be a ton of money to be made in these yen pairs. It looks like they're consolidating for another move higher. Kirby, you're welcome. Eric says bond yields up, bank stocks up. Yeah, it's pretty much the way it works. When the long end goes higher, then banks make money. So Bank of America, BAC, recently hit a multi-10-year high. And you can see that we're bolting back to this $40 area on Bank of America. So yeah, bank stocks look very favorable. GK want to know about pound New Zealand. So I've been bullish on pound New Zealand, and then it hit this resistance level at 198 where it hit back in November. And typically when markets go to a major resistance, so when it hit 198 in November, it went all the way to 185. So that was a solid resistance level. So whenever we hit those things, again, you usually don't go through it like a knife through butter, and it didn't do that either this time. Pound New Zealand hit 198 yesterday and then hit 196 today. So it went, down 200 pips. But, I believe that the long-term trend is higher. So whenever I get these huge sell-offs, instead of being scared, look, I'm in at 193. So it's trading at, 196. So I'm still 300 pips ahead on my core position. So that whenever it comes off like this, I just buy more. I just close my eyes and keep buying into it. Let's see. Jim wants to know GDX. The gold miners. Yeah, that looks like it's really bearish. Obviously, with gold going down, this has been in a long-term downtrend. I never bought that gold was going much higher because all the gold mining stocks always look like crap. So, this does not look good. You know what? I'm just going to get out of a bunch of things here. The NASDAQ is not cooperating to the downside here. To my mind, it should have gone down. I bought some SQQ today, and I'm just going to put a stop in that. I bought the SQQ at 1390, and said I'm just going to put a stop under the lows right here at 1370. I took a pretty big position, about 30,000 shares, and yeah, I'm just going to get out. I'm going to put a stop at 1369. It's not too far from here. All right, the stop is in. D. Godson says, in regards to your risk, how do you determine your position size? I notice your positions are 7 figures. So is your account big enough to be a certain percentage, or you do it, in another way? So yeah, I mean, look, to me, it's risk and reward. It's, how much risk do I feel? So when I load up in something, and it doesn't sound, it's really counter to the message I try and give you guys. sometimes I see something like pound New Zealand where I feel like I can get in at a certain position and I almost have no risk. Now that's a terrible thing. It's a very ego thing to say. But there are certain times where I feel like I can get into a trade where I see it's right at, the entrance where it's about to bolt out of the gate from one way to the other. And to me, I can size up my risk in those areas where it's at a major inflection point. Now, sometimes like dollar yen, when you're in this long trend already and you're trying to get in the middle, or like pound New Zealand that had this 200 pip sell off, once you're in the move now, it's it becomes a little bit more arbitrary, and then I downscale my risk. But like when pound New Zealand had double bottom to 185, and it was just like going sideways every week, it was just churning. To my mind, that churn uh, was just a misdirect. To take your eye off the ball. But I knew that by virtue of the double bottom, that I was getting in right around the bottom, so that I could take a bigger piece of it right down there, and I had a higher security level. And then pound New Zealand bolted 300 pips from the 193, and now it went to 198, and now it went to 196, and now you can have these huge ranges where the risk reward is a little bit more indeterminate. Although I still feel like if you get a key reversal, like one of these days you make a new low, close on the high, that then I'll know where the risk is in pound New Zealand, and then I'll know how to load up again on the next one. So, but in terms of my own account, I have like a dozen different trading accounts. Some are just play money. Some is with my serious money, and then like the accounts that I have now, where some brokers I only put in 250,000 because that's what the SIPC coverage is, and I don't want to be exposed for So I start off with every new broker with 250,000, but I trade that as a nominal account, so I know how much money I have overall. And so what I'll do is I'll treat that account like what's called a nominal account, or it's actually a notional account, where I'll treat that $250,000 like a $2.5 million account, because I know that I can back up that. And so instead of putting up 2.5 million, I'll put up 250,000 and then trade it like 10x. It looks like 10x on a 250, but it's only like 1x on a 2.5 million. So it looks like I'm taking higher risks on smaller accounts, but I'm actually treating those accounts as a notional account because I have, firepower to back that up. And so I'll use, leverage without putting all of the money in there. But, I'm still, trading it like a $2.5 million account with just 250,000 in the account, if that makes sense. James says, well, since you're anti-gold, so I'm not pro anything or anti anything else. I just look at price the way it is, and I surrender to the market. I don't have a position. I certainly don't have a political position that I'm trying to, propound. And that's the thing. You shouldn't go in with an ego, and you shouldn't bet your politics in the market. So let me just read what James has to say. Well, since you're anti-gold currently, what do you feel maybe the area gold may be along again if you've looked at it? So there's a very clear ascending, broadening price pattern, James. The bottom level of that is around 1,650. So to me, that will be, the come to Jesus, point for gold at 1,650. Will it hold there and then send gold into a secular move, higher from there? Or if it breaks there, we're going to go all the way down to 1,100. So about 1,650 on gold to me is where, you're going to have, a serious critical moment there. Yeah, James, I get it. Kirby, that's the key mark. Risk tiny to try and make larger sums. Yeah, so like I said, the whole purpose of this game is survival. If you bet too big and you get taken out and you're not there for, the next move, then, what's the point? So, there's a bus, every day. And Yeah, I need to get out of the Zoom. Um, yeah, so the markets, I really thought that the NASDAQ was looking like it was going to roll over today. And instead, I mean, it's a little early. That's why I wait to see the close because, during the day, you can see these moves are just ballistic. And especially with ZM, it's such a high beta stock that when the NASDAQ goes up one, it goes up three. So it really moves. And so you can really, get caught up in these whippy things and you see the momentum and it looks frightening. And that's why, to me, the close is the most important thing. So, we've still got 5 hours to go till the market closes. And the NASDAQ, is showing more strength than I thought it would. But let's see what it looks like at the end of the day. The S&P is got a narrow range day today. It's inside the range of yesterday. But the thing is, it's starting to run out of steam. So we're right at the all-time high in the S&P, almost near 4,000. And when I look at these narrow range bars, like yesterday you couldn't make a new high, today you couldn't make a new high, but you're just hanging out there. So the question is, are these coil bars, these little inside bars, setting up energy to create another move to new highs, or is it going to reverse out of here? And very, often, sometimes these little inside day bars, they look benign, they look innocent, but they precede, a huge reversal. And so right now you're theoretically trading at a double top level at the S&P. You're trading at this 4,000. It's an area you hit a few weeks ago. And so this area is going to be pretty critical as to whether you have one more push. And it's possible you could have another push out of here from 4,000 to 4,400. You've got all this money coming in the market. You got a new stimulus package. I mean, Biden's going to announce a stimulus package tomorrow. And typically it's kind of buy the rumor, sell the news. So the market is now kind of still, strong on anticipation of this. But it's always once the news is released, once something that we all know is coming is then released, then sometimes the market can have an opposite effect. So Chris says, when will you get out of Zoom? So I'm going to look at the action, now. I'm going to create some parameters that, I know that this thing is whipping around. So today, yeah, I'd want to see and wait until where it closes. So you made a new 6-month low today. So typically, if you make a 6-month low, it indicates the thing is going lower. But you could also have one of these things where it's a bear trap where you make a new low, it holds, and then it kind of springs back into the range. And I don't think this is one of it, but I'm going to just keep watching it, and I have a huge position in it, so I don't want to let it go too far. I might just start peeling out of some just to take the risk off. I mean, I started selling it at 347 and it's at 313, so I still have nice profits in it, but it's less than where it was at 302 this morning. So I just want to see if this rally will hold. We're really at an interesting inflection point, in the market. I'm looking at Tesla. All of the Nasdaq stocks are on this long-term uptrend line, and Tesla once again got to the line today, and it held. And so we're at an interesting point where depending on how we hold today, this thing looks like it has dug in here. So I want to see how we close today on a bunch of things. So sometimes I can't see the entire question for some reason. Svetlana says you recommended a buy for GBP New Zealand, but the chart is going down strong for GBP. Yeah, so each pair, I'm thinking maybe you mean GBP USD. So each trade is different. Pound US dollar is different than pound New Zealand, and you need to trade them differently. Just because it's part of the British pound, doesn't, I look at each chart based on its own merits. So pound New Zealand, made a low under 196, trading at 196.41. I want to see how we close today. I still think that long-term pound New Zealand's going higher. Why says, did you trade soybeans and corn? So I was a commodities broker for 20 years, a licensed commodities broker, Series 3, was it? Or Series 7? Series 3, for 20 years. And I traded everything. So I don't trade them now, but, I trade every instrument the same by virtue of just a picture. Something's either in a trend, an uptrend or a downtrend. If the trend is changing, then there's usually a chart pattern that precedes it. And then I try and identify the chart pattern. Once I identify the trend or the pattern, then I dig in and look at the price action to determine how to take advantage of the momentum, and then how to also quantify my risk. So to me, that's the holy grail of trading. Trying to get into a trade when the momentum's in your favor, and then also to understand where your risk is. And if you can do that every time, you should, over time, you should make a lot of money. But you should make sure that your risk and reward are such that I try and set up trades where my outcome is 3 times my risk. So if I'm looking to make a move in the currency markets, typically I'm risking 50 to 60 pips. So that means I don't look at any move in the currency market unless I can see my way clear to making at least 150 pips. If I can't make 150 pips in the market, I'm not going to waste my time. I'm not going to sit in front of my screen and try and fight it out and try and, jab and get 25 pips before my broker can turn the thing around. So I'm not hostage to the screen. I look at the daily setups. I look for big moves if I don't see them. And so that's why I'm only looking for, 1 or 2 setups a day, sometimes none. And if I can't see a trajectory where I can see at least 150 pips, and like pound New Zealand, I could see 1,000 pips on this trade. When I got into 193, I can see myself clear to seeing this thing going to 203 or 207 or 218. So I still think there's a giant move left on the table in pound New Zealand. So I'm not worried that it's, down 200 pips from the highs from yesterday night. I'm still up 300 pips on my original trade. Benjamin says, do you see EJ? I'm assuming that's Euro Yen continuing higher. I do. It's kind of jammed up here on the daily, but we'll have to see. It's really at an interesting inflection point on the weekly. Right now, you've got an inside range on the weekly, meaning that the low and high of this week, and we're only, Tuesday, so it's got a long way to go, for the week. But the weekly range is still bunched up within the weekly range of last week. So, we're consolidating this 130, and either this 130 is going to be a jumping off point for a higher move or a move where it's going to start rolling lower. And I could make the case right now for either way. And whenever I'm ambivalent, whenever I'm not dead sure, I just wait for more history to build up. So, I might forfeit that great opportunity of getting in, right away. But when I do get in, I'll have greater clarity, and then I'll be able to take, a good whack at it because, I have a confidence in now which way it's going to go. So sometimes when something's sitting on the fence, when I see the long-term patterns one way and the short-term patterns another way, I could make the case either way now. And then the problem is, if you go into a trade with some ambivalence. If you're short and it's going up, then you can make a case for the long side, and then you get out and you get long. Then all of a sudden it turns, and now you can see the short case that you see. So then you get out and you go short, and then all of a sudden before long you've taken 1,000 trades, and you're burned out, and your account's burned out. And I'm sure you guys have been there. So what I try and do is wait for a clear signal, a key reversal, a pattern that is mature enough, that it's gone through enough history that when it does put something, then I can identify where to get in, where I think the move's going to start, and how to identify my risk. And the great thing about that is, even if I'm wrong, then I can see that if something's not going for the way I see it, then, to me, sometimes that just invites, getting on the other side of it. So, I just wait for more clarity. Benjamin, thank you. So I think, that's it for now. Right now, I'm pretty clear that, gold has been in a downtrend, and it looks like it's going to continue to get hammered. And that 1650 is going to be, where, gold is going to need to make up its mind. So, I've got a take profit, a little bit under here. I'll probably move my take profit to the low 1660 level, even though I feel like gold to go to 1650. But we're going to get down there, and then it's going to be a very key inflection point. It might be a good place just to get long, because you're probably going to get some bounce off that long-term trend line around 1650. So I'll look at it then. Kirby, you're welcome. I am doing a webinar tonight at 4 p.m. Eastern Standard Time. Go ahead and if you're interested, I don't know what the link is, just message our team if you're interested. I'll put the link here. So I'm doing a webinar on how to make money off the weekly charts at 4 p.m. Eastern Standard Time, if you want to check that out. It says, does price action work for every single pair, even cryptos? It absolutely does, because price action ultimately reflects human behavior. And that's really all we're trading. We're trading fear and greed. And it's always reflected in the markets in terms of the price. And the price, amazingly, is ahead of events. So smart people are getting in 3 months, 6 months before something happens. And then you hear like the Brexit deal has been, concluded, consummated. But before the Brexit deal was consummated, the British pound versus the US dollar was up like 2,000 pips. And there was already a pattern that indicated that the pair was going to move up, even though there were so many unknowns. But the market always knows. GK says, thanks a lot. I have a small account, but gaining a lot of confidence. So, every journey begins with a single step. So good on you, GK. And we'll see you all at 4 o'clock, if not back here tomorrow. All right. Thanks a ton, guys. We'll see you later. Chris, you're welcome.